Hi everyone, welcome to our new video. Today our Honorable Union Minister of Finance and Corporate Affairs Srimati Nirmala Sitharaman announced Union Budget 2025. It is indeed a very favorable budget for the middle class taxable persons. The direct tax proposals include personal income tax reforms with special focus on middle class, TDS TCS rationalization, encouragement to voluntary compliance along with reduction of compliance burden, ease of doing business, and increasing employment and investment. Now we can discuss the highlighting points of Union Budget 2025 related to income tax. Srimati Nirmala Sitharaman said that the middle class gives strength of India's growth and the government has periodically hiked the nil tax slabs in recognition to their contribution. The revised tax rate structure proposed in the budget under the new tax regime is as follows. The basic exemption limit is 4 lakhs. There is no need to pay tax up to rupees 4 lakhs. Above rupees 4 lakhs up to rupees 8 lakhs, 5% tax rate is applicable. Then above rupees 8 lakhs up to rupees 12 lakhs, 10% rate is applicable. Above rupees 12 lakhs up to rupees 16 lakhs, 15% is applicable. Above rupees 16 lakhs up to rupees 20 lakhs, 20% is applicable. Above 20 lakhs up to rupees 24 lakhs, 25% is applicable, and above rupees 24 lakhs, 30% rate is applicable. This is the revised tax rate structure. Srimati Nirmala Sitharaman in her budget said that there will be no income tax up to rupees 12 lakhs. Hearing that, there could arise a doubt in our mind. If basic exemption limit is rupees 4 lakhs, how tax is not payable on income up to rupees 12 lakhs? It is because under section 87A, rebate will be given for full amount of tax amount if the income is up to rupees 12 lakhs. Now we will discuss the other points. Rationalization of TCS for easing difficulties. Previously under section 194A, TDS will be deducted at 10% if a senior citizen earns interest above rupees 50,000. Now this limit is proposed to increase to rupees 1 lakh. This gives a big relief to senior citizens who possess above 40% of fixed deposits in India. Next point, TDS on rent under section 194I. Under section 194I, TDS on rent shall previously be deducted if the annual rent exceeds rupees 2,40,000. This limit is increased to rupees 6 lakh. Then as regard TCS, Section 206C, subsection 1C deals with remittance under liberalized remittance scheme of RBI through authorized dealer. According to this section, TCS will apply only on remittance in excess of rupees 7 lakhs. This limit is increased to rupees 10 lakhs. In addition, it is proposed to remove TCS on remittances for educational purposes versus remittances out of loan taken from specified financial institutions. This will be a great help for the students studying abroad as it will reduce the funds locked up in students availing loans to fund their education abroad. For encouraging voluntary compliance, budget extends the time limit to file updated return for any assessment year from the current limit of 2 years to 4 years. Srimati Nirmala Sitharaman informed that over 90 lakhs taxpayers paid additional tax to update their income. Then, as a measure of reducing compliance burden, small charitable trusts and institutions have been given the benefit of increasing their period of registration from 5 years to 10 years. Further, the taxpayers can now claim annual value of 2 self-occupied properties as nil without any conditions. Previously, the taxpayers were allowed to claim annual value of only one self-occupied property, and that too on fulfillment of certain conditions. Further, for the ease of doing business, budget introduces a scheme for determining arm's length price of international transaction for a block period of 3 years. This is in line with global best practices. To promote employment and investment, a presumptive taxation regime is envisaged for non resident who provide services to a resident company that is establishing or operating electronics manufacturing facility. To promote startup ecosystem, period of incorporation has been extended for a period of 5 years. To promote investment in the infrastructure sector, budget extends the date of making investment in sovereign wealth funds and pension funds by 5 more years to 31st March 2030. Here we have covered the most important points related to income tax in our budget 2025. Hope the video found helpful. Thanks for watching the video and thanks a lot for all my subscribers. Thank you all.